Okay, let's start things off here on the SPY monthly chart. We just have a strong green candle, and as you can see, we've pretty much done nothing but go straight up for 7 straight months. Totally bullish. Nothing else you can say about that other than it is absolutely bullish. And over here on the weekly chart, we got this inverted hammer doji type candle, um, showing some potential exhaustion at the top on the weekly chart. Let's flip on over to the daily here, zoom in so it's not so ugly looking. Okay, so on the SPY daily, I mean, everyone knows we had a pretty much massive bullish run out of this bounce range over here. Several gaps up. And for the most part, we've managed to hold up these gaps. We have not filled them, and that's definitely a bullish data point to carry forward. Um, for the last couple days of the week here, we've just kind of maintained this bounce range here above these gaps. So yeah, we're in a small balance range, but we've absolutely held the gaps, which is absolutely a bullish data point. Now, if you look at the market maker expected move next week from the options market, it basically has the high end of 689.67 with a low end of 674.45. So what that implies is that the options market seems to think we're gonna head for a bounce range this week, have kind of a neutral week. With that, it also implies we're probably gonna get some gap fills. So I'm definitely gonna be watching out for any gap fills on SPY or on QQQ, as those could end up being the best trades of the week. So if we open within range and then catch a lower high into any of these gaps, then I would look to fade them to the short side. Now, there's always the other way that can happen to close the gaps is we can open up gap down one day, open up below the gaps or in the middle of the gaps, which complicates things a little more as far as closing those gaps. But hopefully, the easiest way for it to happen is for us to open in range, then catch lower highs, shorting the gap closes. So let's take a look over here at the volume profile chart. Let's switch over to SPY. It's taking absolutely too long to load here. Okay, so we're up here at the highs above the gaps. We don't have any like big giant volume nodes in our area. We are above all of them. So that is another bullish data point that I would carry forward. Um, Now let's take a peek over at TPO charts. If they want to load, says just moving kind of slow. So bear with me here. All right. So Thursday and Friday, you can see that both value and the point of control have continued to shift. It kind of shifted substantially lower Thursday and then slightly lower on Friday. So that's a slightly bearish data point for the short term to carry forward. That value is moving in the downward direction. And if you don't know what value is, it's basically where 70% of the most volume of the day on the day was traded, and it's just kind of considered what's fair value price for the instrument that we're looking at. Okay, we're now on the hourly chart for SPY. So let's get a little bit better of a game plan here of what's going on. Again, you can still see we're above these gaps, kind of ranging at these tops here. Got a little bounce range going on between 685 and basically 680. This gap right here, pretty small, not much left of it to fade. So really what I'd be looking for is, can we get a lower high under 678.25? This is a small day here. If we can catch a lower high under that, then I'd really be looking at the potential of filling this larger gap between 676.50 and 672.65. So yeah, that as a reality, you really do want a lower high into the gap to short that. But if I can get a lower high even here, I think it would be worth, at least for me, to catch a short there and see if I can't get it all the way down through this gap close. Um, Otherwise, if buyers really step up right here at 676.45, then there is a chance I could close that trade there if buyers substantially stepped up. But I mean, I think if we get down here, the probabilities of closing this gap, or at least most of it, probably are favored at a higher level at that point. All right, let's take a look at QQQ. We'll go over to the monthly chart on the Qs. I'm sure it looks very similar to SPY. And of course it does. Just 7 months of going straight up. This last month was pretty substantial candle, really. Take a look at the weekly. All right, the weekly is a little bit different here because we did have a pretty substantial gap up on Monday. We have an inverted hammer on the weekly with a gap just below us. So this inverted hammer is definitely implying that there is some selling pressure going on. And, maybe this gap close is becoming like a more realistic idea going forward. If we look at the market maker expected move on QQQ this week, very similar to SPY. Expected move high is basically the all-time high. And the expected move low is just near the bottom of this larger gap around 619.20. So it is implying we're going to close this gap and hang out in a bounce range on the week. So if that's what happens, I definitely want to catch that gap close. Because it looks like one of the most cleanest trade possibilities on the week right now that I see, and kind of a high probability that that might occur. That doesn't mean just go out and short the market. Absolutely not. We do need to wait for a lower high into this gap before I could short it to close it. Okay, TPO charts on QQQ. You can see on Thursday, value and point of control moved down substantially lower on Thursday. And then Friday, value shifted slightly, just barely higher on QQQ. Well, point of control just basically maintained the same level. Value high switched higher and value low actually switched lower. So remnants of a bounce range. But overall, value and point of control are still lower from the highs on Wednesday. If we take a look at market profile, you know I got a lot of lines on this chart, but no substantial volume nodes up here. I mean, there's a little bit of volume, but all the real nodes of volume are far below us. Bullish data point and holding up the gaps, also bullish data point. So SPY and QQQ looking very similar right now, with QQQ having some larger gaps that are closer and might be a little easier to trade than SPYs, but either way, I would just go with whatever one or both had if the clean setups appear. Okay, let's take a look now at IWM at small caps. This is the monthly chart, and right away you can see there's kind of a divergence over here in small caps compared to SPY, compared to QQQ. Yes, we have basically gone straight up for that same 7 months since April, but definitely not as extreme as you're seeing in SPY and QQQ. And that's going to be due, obviously, to semiconductors, mega caps, and AI. Let's take a peek at the weekly chart over here. We actually do have a red bearish candle on the weekly chart for IWM. And then on the daily. So on the daily here on IWM, we did get new all-time highs last week or whenever it was. And then we attempted it again this week, but as you can see on the daily chart, we have a clear double top. And not only that, we attempted to get above this bounce range right here twice and failed twice. We're back inside of this bounce range. Price action is much more messy over here. It's much more bearish over here. So it's definitely, I would consider this a bearish data point for SPY. Because obviously small caps do have an effect on the price of SPY. Not a massive effect, but they definitely have an effect. And we are back inside this bounce range. There's really no clean area to trade inside this bounce range. I would not do it. So the only way I get interested in trading IWM at this point is below the bounce range of 241.41, or if we're in new all-time highs along. Other than that, it's messy. I don't see a whole lot of reason to be trading it. And I do think that right now it is a bearish data point for the market. Okay, let's just quickly go through the S&P sectors. SMH, which is semiconductors, it is up 45% on the year and 12% on the month. It's moving like a meme stock instead of a sector. Absolutely insane. Semiconductors have just gone nutty recently with all the new data centers and all the crazy stuff going on. We were red Wednesday, Thursday, Friday, but we just slightly pulled back. It is absolutely what is moving the market higher. It is this and this alone, more or less. And it's being ran by NVDA, by TSM, by MU, Qualcomm, AMD. Okay, those are the names that are causing this. So we got some gaps up on it. I've set alert at these gaps because I want to know if they are closing, because that's going to be a major bearish data point for the broad market when they are closing. And I'm not going to want to be long on probably much of anything if that's happening. So that is my reason for having alerts there. Let's take a look at XLK. XLK is also up 28% year to date, 8% on a month. That's still fairly substantial for a sector like this. And I think much of XLK is tech, by the way, and much of its moves up is being carried by the SMH. Also got alerts set on the gaps because I want to know if they start closing, because I'm probably not going to want to be long in much of anything if that is happening. All right. Let's take a look at some other sectors. XLC here has a lower high and a lower low, bearish data point for the market. XLRE, real estate, it is in a bounce range at the bottom of the bounce range. So I would consider this neutral as long as it holds bounce range and moves up this week like it should. If it's maintains this bounce range, then it might be a slightly bullish data point. Doesn't have a huge weight, so I wouldn't put a whole lot of weight into that. XLB materials. Uh, XLB really's got like this head and shoulder double, triple, quadruple top type pattern, and just on Friday kind of looks like it's falling below the neckline of all that, so it's kind of falling off a cliff. I would definitely say that appears to be a bearish data point. XLY, consumer discretionary. With XLY, we had a gap down in go, then a gap up, and we've held that. So kind of a neutral data point right now. Something I've been kind of waiting for is if it can break out above this 242.55 and we can get a breakout on one of the key levels of Tesla at the same time, then that might be a great time to be long Tesla. Something to think about in the future. XLF financials. With XLF, really just bouncing in neutral. XLU with XLU. Kind of got this head and shoulders pattern going on the daily chart. Then on Friday, they moved below the neckline, so I would carry that as a bearish data point. And then finally, we got XLV, healthcare. Healthcare actually looks pretty good unless this turns into some type of double top. But overall, we got a higher high, higher low, higher high, potential higher low, uptrend. So as of right now, looks good on that. So bullish data point for the time being. Um, let's take a look at right here. We've got junk bonds. If I can zoom in so you can see it, that's not a very good look. Let me try a different way. Maybe I should just select this, a single chart. Yeah, that looks better. All right. Jump bonds have moved down the entire week. Potential double top right there. We did have these gaps, and I had alerts on these gaps when that was happening. And I can tell you that every time one of those gaps was filling, the market was moving down and I was looking for shorts or I was in shorts. So, junk bonds is looking to be a bearish data point for the market right now. Corporate grade, look at this. We had a gap down and go. Um, Pretty much gone straight down. So again, bearish data point for the markets. RSP breadth, not breath, but breadth. All right. Breadth has, as this move happened, we've been moving down all week long on this. So breadth has been moving down while much of the time the market was moving up, which is a bearish divergence. Um, Really just telling us, like I've said probably many times now, the market's only moving up because of semiconductors, because of NVDA. So that's a dangerous thing. Any kind of pullback, any kind of sell-off in NVIDIA puts the market in a dangerous spot as far as potential to have a correction or sell-off. So Brett is looking to be a bearish data point for the market right now. So, I mean, we've got a lot of bearish data points kind of lingering out there. Much of the rally was hyped around this China deal, around what's going to happen with FOMC. Much of that is over. A lot of the big names, big Mag 7s had earnings this week. Some went well, some didn't. Um, so we do still have a few earnings left that the market has to look forward to next week and beyond. So those could come forward as catalysts, but much of these catalysts that we're looking forward to have passed. So I do think that this thought that we might be in a bounce range next week is getting to look more realistic as I look at more data points, as I look at what's on the calendar ahead for us. All right, now we'll get to the fun part and look at individual stocks and setups, potential setups for the week ahead. As we look at setups, I'm gonna hopefully just try and stay in the hourly chart with extended hours turned off so we can get a clearer view of what we're looking for in those charts and so I can move through it quicker. So obviously on Amazon earnings this week and maybe on leaked documents that they're trying to get rid of 600,000 employees and replace them with AI. That's good for the company. It might not be good for the people, but it's good for the company and good for the stock. So I haven't actually verified that that was true, but I did read that somewhere. So anyways, gapped up into major new all-time highs. Friday, it did move down. What am I looking for? I'm looking for, can price get down to 242.42? And if it does, do buyers step up right there? That's the previous all-time high. If buyers can step up right there, maybe I step up as a buyer right there. Um, Otherwise, I want to know if we get a higher low over the high of day from Friday, because we still have this overnight all-time high level of 255.60 that price needs to come back up and take care of. Highs don't usually end with overnight highs. So what do I mean by that is that you're not going to typically see a 10-year high stay as an overnight high. Generally, when there's an overnight high like that, we're going to come back and hit it before any kind of major sell-off happens. All right. Let's take a look at NVIDIA. Okay, with NVIDIA, kind of got this failure to go higher right here and move down into this level. We're bouncing out right here. We have thin structure to the left-hand side below. So what I'm looking for here, can we get a lower high above or below 202 and target this 195.25 level? So as the eventual target. That doesn't mean I'm taking 100 contracts when there's a lower high below here and holding all 100 contracts to 195.25. Um, that's not how I trade. I sell contract. I'll just explain the way I trade. If there was a lower high below this and I took 100 contracts, when we got to risk reward level 1 for 1, I would probably sell up to half of those contracts. When we got to 1 for 2, I'd sell another quarter, and then I would hold the final quarter to see if we can hit the final target. That's basically the way I trade. Let's take a look at Apple. Okay, with Apple, we had a gap up on earnings, went straight down from market open since then, and we've got this potential for this kind of weird looking head and shoulders. You can see the shoulder here, head here, shoulder here. So what I'm waiting to see if it can happen, can we get a lower high below 267.65 after failing to go higher up here and catch a short to kind of short through this thin structure down to 265.40. It's kind of what I'm watching out for on Apple. Another one I've been watching recently is SOFI. All right, SOFI had a nice move up, has pulled back to the previous top of this bounce range. Buyers have stepped up and we're back above this 29.50 level. So what I want to see Monday, can we get a pullback to the 29.50, see buyers step up and take a pullback long up to 30.25. Well, at 30.25, if you look closely, you can see if we move back up to this level, if sellers stepped up right there, that would start to create a head and shoulders. So once we got there, I am definitely keeping an eye out to see if sellers step up at this 30.25. Let's take a look at Meta. Meta is just doing terrible right now after earnings. Absolutely terrible. It is trading below the 200 SMA, which why do I not see it on my chart right now? All right, I somehow removed my indicators, but 200 SMA is basically right around this 677 level. And we've been trading below that. We actually moved slightly lower, not very much lower today. So I really want to see, can we get back above the 200 SMA, get a higher low above this 681.15? If so, I'm very interested in possibly swing longs or shares or something to get long. and get back in the groove of going long on this thing. Otherwise, if it's gonna continue down, lower highs below 648.05. Palantir has earnings this week, so I am not going to be looking at that. Microsoft, we need to show more charts. Okay. Microsoft was moving up, very nice. Had earnings, sold off, gap down, sold off. I was watching today to see if buyers were going to step up around the 518.50 level. They did not step up when it hit that level. It moved a little bit lower and they stepped up on 516. So here's what I want to see. Can we get back above, clearly back above this 518.50, 518.70 level, get a higher low? That still may not be enough for me to go long. Then move up above 523.50, get another higher low there. Then I'm thinking I want to get long on that. Uh, Google. Google's been a great move up. Um, as you can kind of see here on Thursday and Friday, kind of just moved down, closed some of the gap, then buyers stepped back up, but it hasn't created any kind of clean price action in here that I can use to structure trades off of. So what I want to see, can we fill the rest of this gap and have buyers step back up at 275.30? If buyers step up there, maybe I step up there and go long. It's kind of the only way I can see a well risk managed way of getting involved right now. Take a look at Hood. Let me get zoomed in here a little better so we can see what's going on a little better. If Thinkorswim will let me select the right stuff. All right. With Hood, we've got some somewhat thin structure over here. We're near all-time highs. If we can get a higher low above 148.85 with broad market strength, we've still got an overnight all-time high level up here of 154.17 or so to target. So if we get a clean higher low above this with broad market strength, might be interesting to go long. AVGO, Broadcom moved up, pulled back at a good location for a higher low on the daily chart. Has a bunch of messy price action right here. So although buyers have stepped up, although it's at a good location for a higher low on the daily chart, this price action is so messy that, and plus breakout trades have been really difficult to trade for about 2 weeks now, that I don't think it's the cleanest setup and I probably wouldn't take it. Let's take a look at Western Digital. WDC gapped up on earnings, closed the gap. Buyers have stepped back up. You can see two possible ways to get involved here. One would be a pullback retest of 145.70. Pull back, buyers step up, I step up, go long, or break above 151, higher low, get long, back to all-time high. Oracle. I shared in a previous recent video and in recent posts some Oracle gap close ideas that did work out extremely well, and I also caught. Oracle, although it hasn't closed all of the gap, if you look left on the chart, this is a good location for a higher low, and we can see the potential of buyers stepping up here. We can see an inverted head and shoulders forming on the chart. Got the neckline here at 262.68 or 262.70. If we can break above that, get a higher low, have broad market strength at the same time, I would definitely be interested in going long through this thin structure and maybe this gap. Looks like it's got good potential to go long, but otherwise, if all that falls apart, when we break back down below 256.60 with a lower high, with selling off happening, and this turns bear flag, then by all means, short to close more of the gap. Um, Take a look at IBM. Okay, IBM. Well, this thin structure over here. Higher low above 313.50, along back to this 318.15. If everything goes to hell in a handbasket and the market's selling off and this turns into a head and shoulders, and then we catch a lower high below this 303.20, we've got lots of thin structure to trade short through. So if all hell breaks loose, this might be a good chart to take a look at and see what's going on. I am getting sudden alert there just in case. Um, Final chart I want to take a look at. Netflix. Okay, so if you don't know, Netflix has a recent catalyst. It announced a stock split coming 10 for 1. Um, that means a lot of people that weren't previously able to get involved because shares are 11, 12, $1,300 will now be able to get involved when shares are 110, 120, $130. So that's a good catalyst. Splits like this and situations like this can often cause a stock to go higher. And add that in with the fact that we had a huge gap down from earnings. Um, and the daily 200, once again, not currently showing on the chart, is somewhere right around 1110, I think. It's right in this area. So my idea is if we can reclaim the 200 daily SMA, and then if we can get a higher low above this 1129.8, 1130 level, um, then at that point we have thin structure off to the left-hand side, should be easy to get through. Then we have this big gap right here, mining support right here at 1177. So if all the factors can come into line together, there could be some potential easy trades to the long side above the 200 SMA. That is all I got for now. Like, subscribe if this information's helpful, leave a comment. Um, Also, if you are not journaling your trades, if you're not using the data that you can get from journaling your trades, especially in a professional trade journal that can help you break down information and see what's working and what's not working in your trading, then check out Strategy Forge. Or you could also go to TradeZilla. You can also go to TraderView. You don't have to use Strategy Forge, but I do personally believe Strategy Forge has better futures than them. And I know for a fact it is also cheaper than the others. Um, and I can also give you a coupon code strategy for $25 off. And that is also the monthly fee, $25 or $249 for a year. And the code strategy will give you $25 off the yearly fee or $25 off for a free month. Plus, if you go to strategyforgejournal.com, sign up for a 2-week free trial, then use code strategy. You will get 6 weeks free before paying a penny, and you can cancel at any time. All right, that is that. Have a good one. Keep your accounts green. I will see you on the next one. Bye.
Buy! I don't need a journal. Patterns. I trade on gut. This time's different.
I'm done guessing. Day trading chaos? Strategy Forge Journals got your edge. Join now. Win big.